One of the government's key initiatives during lockdown was the introduction of the mortgage payment break scheme that offered financial assistance to those that were struggling to make their monthly payments due to the pandemic. But the scheme isn't being extended any further following discussions between the government and the retail banks. And so to talk me through the implications and what that means for perhaps struggling homeowners is Martina Hennessy, Managing Director of Doddl.ie. Martina, you're very welcome back to the Home Show.
Thank you, Sinead.
Now, tell us a little bit about the science bit. How many people availed of the payment break initially, and how many do we know are still on them at the end of kind of coming into October now?
Yeah, so absolutely, Sinead. So the payment breaks, there's roughly about 89,000 mortgage accounts that availed of the payment break, which was announced in March. There was an extension to that payment break by a further 3 months, and 37,000 mortgage holders availed of that pension or of that mortgage payment break. So we would have to think that coming towards the end of September, there will be a large number of people who are still, it's not within their means to return to their original mortgage agreement due to circumstances outside of their own control.
Yeah, and I suppose there's a little bit of kind of crossing the fingers, if you were in one of the banks at the moment, because you're not going to know yet how many of those will be able to revert to the payments. Especially those who took the second break, the 6 months, because we don't know what their circumstances are, if they're back in work, if they can afford it, and how many of them probably could have afforded it and just said, no, I'll take the extra 3 months because I can. It must be a worry for the banks.
It is, Sinead, and I would imagine, that is it's a key project from the Banking and Payments Federation of Ireland have noted that they have their members of 2,500 staff in place to work with customers in offering tailored plans and solutions. So what the banks are really calling out for is people to engage with them. So mortgage holders to engage with them if they feel that they're not going to be able to revert to the original terms of their mortgage, to engage, to look at alternative arrangements that can be made. And there's various options around that, Sinead, that mortgage holders can avail of if they can't return to their full repayments.
Okay, but there is going to be a cohort of people who just feel, do you know what, I just can't afford this payment anymore. And if that's the case, what's ahead for them now, Martina?
Yeah, so the main thing is engagement. It's a difficult time. Nobody takes out a mortgage to be in a position where they can't repay it. And, most people in this case have circumstances beyond their control due to the pandemic. So the main thing is to contact the lenders. I know it can be daunting. There's so many other things that are going on with health concerns right now. But, it's really important. We can't underestimate the importance of engaging with the lender and to be aware for mortgage holders that they're not alone. There's a large number, there's thousands of people who are going to be in the same position. And what the banks have all put in place is expert staff who are specialised in the area of mortgages and mortgage arrears. And their mandate is to ensure that they deal with customers and offer individual terms and circumstances, individual tailored plans. So the initial focus is on engagement with the banks. The banks will look to assess as to what you can afford to repay and what options are out there for you, and they'll come up with solutions. And the consumer has a full backing of the Central Bank of Ireland, who have noted that there needs to be tailored individual plans, and they haven't extended, or the banks haven't extended the existing payment break because they're looking at individual needs as opposed to a system-wide break. And I suppose what they've learned, Sinead, from the financial crisis is that while temporary forbearance measures can assist, it's really in the borrower's best interest to put sustained forbearance arrangements in place if somebody cannot meet their original mortgage commitment.
Well, yes, really what you're still looking at though is the MARP process, the mortgage arrears resolution process. And where that differs, it seems to me, from the payment break is that we were promised at the beginning, if you take a payment break, it's not going to appear on the credit register, it won't affect your credit rating. MARP is different, isn't it, Martina? Because you will appear as a restructured loan, it will affect your credit rating. And yes, you might get a restructure, but it's going to have longer term implications now. There's no getting away from that.
That's correct, Sinead. So the initial 6 month term, it's noted that that arrangement that was in place in relation to mortgage breaks or reduced payments was not recorded on the CCR or the Central Credit Register. However, as you say, post this 6 month period, any mortgages that aren't made, repayments that aren't made as per original terms will be required. The lenders are required by law to report all outstanding loans to the Central Credit Register. And if somebody does not meet their original terms, so if alternative repayment arrangements are made under MARP, then this will be reflected on your credit score, and it does impact on the ability to borrow in the future. It does impact on your credit rating for a period of time, and it will be reported to the CCR as a restructure to the original term of your loan agreement.
Yeah. So in terms of then possible solutions, like longer term solutions now that people will have, because of course the MAR process is long in place. It's nothing to do with COVID particularly. What kind of solutions might be available for mortgage holders out there who are worried today that they're going to end up in this process and they don't know what's ahead of them?
Well, absolutely, Sinead. So the governor of the central bank has come out to say that, there is nothing in the system that's stopping banks from putting further payment breaks in place. So that is an option, and the lenders will assess individual circumstances to see whether it is possible to make any payment. So that's one solution, or one, short-term, I suppose, option. In terms of looking at more longer-term options, or again, just alleviating some of the pressure on people, there are interest-only options available, which would mean that you're servicing the interest only on the mortgage, and the capital portion of the mortgage is not being repaid. So if we look at how that might make a difference for a household that maybe has income cut as opposed to perhaps on the pandemic unemployment payment, if we look at a €200,000 mortgage over 25 years at an interest rate of 3.5%, the standard repayment would be €1,000 per month. An interest-only repayment would be €583 per month for that particular mortgage of 200,000. So you can see that there's a difference in that on an interest-only basis, where you're still paying the interest, but it's not such a big cash flow commitment from the household at that time if their income has been reduced. So that's one option, interest only. Other options are reduced repayments. So you can have a portion where you're a period of time where you're part or interest and part capital. So if you can afford to pay more than just interest only, that is another arrangement that can be put in place. Term extensions. So the lenders can look at how to reduce your repayments in line with what your affordability is. So they can look at extending the term of on your mortgage so that your repayments are reduced. All of those items do tend to mean that your overall cost of credit, and I would caution that your overall cost of credit is higher, because you're paying the mortgage either over a longer term, or you're capitalising it. You're not paying your capital off as you normally would do. But in the current situation, this may be relied upon, because I suppose if people cannot pay, their full mortgage repayments, these are other solutions that are there, or that can alleviate some of that pressure. If somebody is already in arrears before COVID, for availing of the COVID payment break, then they can look and speak to their lender about capitalisation of arrears, and looking to engage in a more sustained, long-term manner as to what the solutions could be.
Okay, so there are solutions out there. It's important that you engage. I'm talking to Martina Hennessy, Managing Director of Doddl, here on Newstalk on the Home Show. So Martina, what I'm hearing from you overall is, look, there'd be people out there who'll be worried about things like they may never have been involved in this before. They may have paid their mortgage every single month since the day it was taken out, and suddenly COVID has knocked them for six, and indeed their mortgage repayments. So what I'm hearing is, engage with the banks. Don't ignore it. People might be desperately worried about losing their home. How likely is that for some people, or does the MAR process protect you from that happening?
So yeah, absolutely. So under the CCMA, a lender can only commence legal proceedings for repossession where every reasonable effort has made to agree on alternative repayment arrangements with the borrower, and that there's a clear that other clear requirements are met. So it's not that people are at risk of losing their home if they engage with the lender. The key thing is, don't be afraid. I know it's such a daunting process, and the terminology and all the different options that are available might be daunting for somebody to engage with. And we're all very emotive about our homes. We love the security of having our homes, and we're afraid if anything might jeopardize that. But the real point is, this is a unique point in time. The financial crisis has been and gone, and the lenders have learned a lot from that in terms of how they engage with customers, how they need to engage with customers. This has been such a deep and sharp shock due to the pandemic, and it's not going away, as we can see just generally, obviously, in terms of health advice and with different stages of levels going through each of the counties, people are going to find that they're in this state of flux for a long period of time, it would seem. So the real point is to engage with the lenders. You're not alone. They have expert staff who specialise in this area. Don't be afraid to ask questions. Don't be afraid to say you don't understand what they mean. Don't be afraid to ask for solutions. That's the big thing. You're going to the lender to say, look, I pay my mortgage if I can pay it right now. I'm experiencing difficulties. I really need your help here in terms of coming to a solution that's sustainable for both of us. Work out a budget. I know that can be difficult also, but work out a budget as to what you can pay. The lenders will go through that as part of their assessment with you in terms of working out a solution. But there's really good resources in terms of paymentbreak.ie. The Banking and Payments Federation have put that in place, that has a questions and answers section and an FAQ section in relation to what the options are, what you should do, where to start, because that's all often a real case in point. As you say, many people have never been in this situation before, so they don't even know where to start with it. And the real thing I would call out is, please do engage with your lender. That's what they're there for. The
Yes.
central bank has called out that they are going to be very clear with lenders as to what they should be doing. They're going to be, assessing, they're assertively supervising the process to ensure that expectations are being met in terms of the lender's engagement with the banks. So you're not alone. You have the support of, I suppose, the Consumer Protection Code and under the central bank guidelines. You have the support of, I suppose, the lenders, the government, in terms of what they have to do. They're tasked with ensuring that they are acting in your best interests and come up with solutions that are sustainable for you. So if you can pay, then there's solutions that are there if you can pay any portion of the mortgage. But if you can't, you really need to engage. This isn't a time to, I suppose, to pull back and say, God, I don't know where to start with this. Call your lender. They're all there. They have 2,500 extra staff that are put in place specifically to deal with consumers who need, mortgage holders who need support. Don't be afraid to engage with them. The worst thing you can do is not engage. If you don't engage with them, then you're starting through a process that they can't find a solution for you. So it's really, really important. You're covered by all the consumer codes if you engage with your lender, if you try and find a solution with them. So don't hide away from it. I know it's a particularly stressful topic and thing to talk about and to action, but it's really important you call your lender. Don't wait to roll off the payment break. Action it now. Get in there and get a head start. Understand what your options are. Understand what your budget is and what you can pay. Or if you can't pay, it's really important that you call that out to the lender.
Okay.
There are solutions that are there and that can be offered to you if you are in that circumstance.
Good. All right. Well, good advice there for anybody who's coming off the mortgage payment break, which won't be extended, we're told, by the government. Martina Hennessy, Managing Director of Doddl.ie, thanks for joining us this morning on The Home.